Someone told me earlier when I did radio at 7 a.m. that Draghi had a glass of Chianti last night. Our guest had read that. Ian McKinnon said that from VTB to celebrate the market reaction. I mean, he had cause to celebrate, didn't he?
He did.
Given how investors responded to yesterday's moves.
And we might have more cause to celebrate, quite frankly. One of the interesting snippets that he mentioned in his press conference was the notion that there is going to be a conference in a couple of weeks' time, I think, between ECB and the Federal Reserve in Frankfurt to discuss communication. And I think it was just another masterclass in preparing markets well to prepare for the statement as provided, and critically, from a central bank's point of view, retaining all the optionality. Now, they've made it a very clear statement for the next 9 months, but they've kept it deliberately open-ended beyond, and they will adjust to circumstances along the way. So, without fault, quite frankly, in terms of the delivery yesterday.
Impact on bond market. Clearly, investors liked it yesterday. We saw yields declining everywhere. The periphery benefited more than the core. Bit of a backup today, but nothing like the fall we saw yesterday. What would you say the outlook is now for core versus periphery?
Well, I think the main market response to yesterday's announcement was this means means less about quantitative easing, but more about when does that next rate hike take place. And that is just being pushed further and further into the back end of 2019, it would appear. So subject to macroeconomic events, of course. So in that sense, I think that's what's really reassured markets, is the context of any rate increase, formal change in monetary policy stance is a long way off still. I think in the context of that is still then a risk-on environment. You see that, I think, in the equity markets, and I think to a certain extent you see that with the riskier sovereign elements within the Eurozone context. And therefore, the markets such as Italy, for example, can certainly do well out of the back of that, at least short term.